remember, because of the pricing mechanism. And that's where we've made our money today. We've made our money in the overnight session, long equities, long bonds. And you can see that from the charts here, guys. You can see that we had this brilliant ramp up in equities from the closing bell, even if you'd bought into this little phase here. You can see that you've been able to buy into these VWAP pullbacks. We talked a lot about this level here for a buy trade off the 50s, traded 80s plus change. We talked about bonds being a buy trade, of course, and if you look at bonds, it's been very, very difficult to be selling bonds, which is why it was why it was such an important. Well, I thought it was such an important conversation that I was having with myself this morning, and buying bonds into these low prints to me seemed like an absolute no-brainer opportunity to get into that as a big long swing. And buy-side equities, buy-side bonds has made us our fortune today, guys. But if you didn't know any of that, none of this makes any sense to you. Well, that's why you're supposed to be here. But when I ask a question and nobody answers it, nobody acknowledges it, nobody says that it's important, nobody mentions it, nobody comes back, I just assume either you simply don't get it, or you all do get it, but I simply have no way of knowing one way or the other whether this is important to you and you acknowledge that it's important, or whether you're simply just ignoring me. So I have no way of knowing that, no way of knowing it. And it leaves me wondering, okay, well, there's no point in covering it just now because I'm not getting anybody covering along with this storyline. And that's what we've got to try and understand as traders, is that these are incredibly important. We covered the aspect of macros yesterday, the concept of using bigger long-term charts. Well, this is almost in the same theme. The idea that these longer-term views, the idea that these longer-term ideas, these longer-term narratives are incredibly important to us going forward. And that's why we've made a fortune. But if you've not made a fortune, well, hell mend you, because you haven't understood anything I've been talking about. It's not my fault. It's your fault. It's your fault. Anyway, buy-side equities. There was a very nice lean there at 72.5 for a buy opportunity. We've taken it back up to 81.5 on the first big rejection of those lower prices. And we got a very, very nice buy-side pop. Never took out the day high so far, which is now at 82.5, and that's now setting up the initial range bracket. We do have the possibility of a 75 this afternoon, remember, so I am very, very nervous about long side of anything at the moment. We've already made the money, the market has already gone up, so it's a little bit harder to be zero risk on this at the present moment, as it was very easy to be zero risk last night on long bonds and long equity. So welcome in, guys. We're ready to rock and roll in what should be a relatively straightforward day today, with the market not doing very much as people stay away ahead of the FOMC, stay away ahead of the FOMC. And obviously at that stage, we'll see what trickles into our next consideration here. Very quiet start. Max has not done any trades just yet on the cash open. I'm just checking to see if Max did anything on the NASDAQ. Nope, no trades on the NASDAQ either for the bold boys. Definitely bullish the NASDAQ, however, in terms of momentum shifting to the upside. Yep, sticking inside the bracket, guys. That's what we expected it to do at the cash open today, sticking inside the bracket. People trying to just basically just taking the day off. A lot of professionals simply don't bother trading non-farm payrolls, CPIs. They've already done their work. They've already made the profits because of the pricing in mechanism, which is obviously a lot safer than trying to gamble on an outcome. And that's why the idea of what's being priced in is so important, because that's where the real money's made by the real professionals, is getting involved in the pricing in mechanism. And if you obviously understand that, you're in a great position to take advantage of that type of news. Other stuff, sell-side bonds for me at the moment, it has been almost exclusively sell-side, except for the longs from last night. We had one more long coming into the London Open, and since then all I've been doing is selling top edge bonds, and we've struggled to get back below 147. Not a surprise, I suppose, but we're back at 147 again. So a great opportunity just to go ahead and book some more profits at that. So that was $1,000 on that sell side swing, and I don't know what much more we can do with bonds so far today. I think we're pretty much bonded out at that stage. In terms of other numbers, we've obviously seen some numbers that just came out there, and they are disappointing, aren't they? Retail sales, core retail sales in the US at 0.5 against a 0.7. Retail sales at minus 0.3 against the forecast 0.1. Empire manufacturing was forecast to come in at positive 2.4, came in at minus 1.2. Import prices at 0.6, also down month on month against the 1.1 forecast. So for me, disappointing numbers, which might keep the Fed running the 50. Now, it might keep the Fed running the 50, and if they run the 75, they may sound a little bit less hawkish. Now, why would they do that? Well, if the market's already basically pricing 75, they might get away with doing 75 without doing too much damage. So if they do that, and they just come in with a slightly more dovish tone, that the disappointing numbers are being noted across several economies, even across China, for example, and across the Eurozone, the UK, we are noting disappointing numbers, then we can obviously understand that there is chatter in the central bank circles about perhaps having to do a little bit more for the equity space, because there has been a big sell-off across the globe in the equity space. And that's what we can understand. That's what we can understand. And then obviously if they do 50, it's not so much if they do 50, that'll have a very positive knee-jerk reaction, but how hawkish do they sound for 75 at the next meeting? So there's a lot of possibilities at this meeting. It's not very often that we see a lot of possibilities. We could see 50 and a neutral tone. We could see 50 in a hawkish tone. We could see 75 in a hawkish tone, which would obviously be the worst case scenario for equities. And we could see 75 with a dovish tone, which probably could still lift equity prices. So there are a lot of positive equity narratives. The only one that's really negative equities is 75 and a hawkish 75 coming. 75 and a hawkish 75 coming. That is going to take equities potentially down to 35 handle. Mike, you think? 35 handle? If they come out 75 plus a hawkish 75 plus. So I think the 35 handle would not be off the table if they did something like that. If they went really hawkish, they said, no, we're definitely ramping up. We're definitely ramping up. We're definitely ramping up that storyline. Then it's obviously the worst case scenario for anybody holding equities at that stage. But looking at the neutral rate down at that zero, almost the zero, which we just looked at on the 2s5s, we can understand that the chance for them to do that is pretty slim. The room for the Fed to maneuver has been squeezed quite tightly shut at the moment. And I hope that makes sense to everybody, guys. I hope that makes perfect sense. Anyway. Welcome in, guys. I hope you're all ready to rock and roll.